So with more buyers headed into the showrooms for a new car, is this the time to bet on auto stocks? Adam Hewison from INO.com says investors should bet on new automakers like Tesla, while Brian Evans from Bond Street Wealth Management thinks investors should stick to the old school brands like Ford and GM. Why the divergent views? Let's talk about it. Adam, make the case. Why is newer Tesla the better long-term play in your view?
Well, let's start off with one simple premise, and that is I think Elon Musk is the equivalent of Steve Jobs. What Steve Jobs did for the computer industry, Elon Musk is doing for the automobile industry. In fact, if Bob Lutz, about 7 years ago, Bob Lutz was a very famous automobile guy, GM, said these guys came out of left field, created a car in 4 years, brought it to market commercially using lithium-ion batteries, which is a first, and it's commercially successful. It's truly a remarkable achievement, and I think Elon is going to continue to push the pedal, so to speak, the electric pedal, to the ground. I just had the good fortune, Maria, to basically drive a Tesla S right here in Washington, D.C. last month, and it is a top-of-the-notch car.
Yeah, but are people buying them? I mean, that's the issue. We've been talking about electric cars for a long time.
That's true.
Okay,
it's true.
And they really have not gained traction.
But the first quarter here is pretty telling. I think they sold 4,475, 750 cars, which is more than they expected. And I think they're going to make an announcement this afternoon. I tell you what I think the announcement is going to mean. I think they're going to allow leasing for the first time. They never had that option. When I went down to the showrooms here in Washington, I wanted to lease a Tesla. They didn't have that option. I think they're going to announce that this afternoon.
Brian, what do you think? Make the case. Why do you think the old schoolers like the Fords and GMs of the world are the better choice?
Well, it's not that I don't like Tesla, but we're hearing numbers that were just mentioned of several hundred sales, 400 or 500 sales, yet the company's market value is over $5 billion. So going back to the Steve Jobs analogy, yeah, if it's the next Apple, that would be great. Now, I can't say that it won't be, but along with every Apple, you got a lot of bad apples, and I'm not saying they're bad. I'm just saying that, for instance, during the .com era, there were a lot of companies, a lot of people were excited about trading at high multiples, and Tesla right now is trading at 12 times its gross sales. So it's not really a value play whatsoever, whereas General Motors is trading at about 6 to 7 times earnings for a 15% profitability, yet it has a double-digit growth rate projected by all analysts' consensus estimates in the double digits. So it's, as I, in my own fund, I value my stocks based upon their valuations. It would have been the 5th best valued stock out of the S&P 500.
Yeah, but what about the issue of the Japanese yen? I mean, for a long time, the Japanese yen was going against the Japanese automakers, really a positive for the U.S. automakers. That's reversed, certainly in 2013. Does the yen keep going